Hello traders, I have a really cool, very easy to learn indicator that is completely free that I'm going to be showing you guys soon. Not only that, it works on Bitcoin, it works on really any coin on Binance Futures or other, or other futures trading platforms. So you can use this really on any asset that has leverage. Before we dive into this very helpful indicator from Leviathan, I recently launched my new Discord community where we have private live streams. I show my trades. I even trade live, which is stressful, but it's been working really well so far. I post private articles on alpha, on arbitrage, on all different kinds of techniques that I can help you make money. If you're interested in taking a look at this, you can click the link in the description below. If it's your cup of tea, do it. If it's not really your cup of tea, you can always try, then cancel at any time, just to see what the community has to offer. I'm really proud of it, and I think you guys should check it out. Click the link in the description if you just want to learn more. Okay, so this indicator right here is called Swing Points and Liquidity by Leviathan. What this is showing is very, very simple. It's basically categorizing lows and highs. Lows are in green right here. Highs are in red. It might be a little bit faint, but you're going to have to really strain your eyes to try to see the red right there. Basically what this is showing with the text numbers, which is the most important part, is the amount of volume that was transacted at a certain lower high. And this is why this is important. So if we look at, let's say, let's look at this guy here. This candle right here that I'm hovering my cursor over had volume of, what was it? It says right here, this is the amount of Bitcoin, of course, on a 5-minute candle. It had volume of 7,245 Bitcoin on Binance Futures. Okay, you can see that number right there. Now what this candle corresponds to is a local high. You can see that right here it was reported 72.45. So basically what this is showing is it's showing whenever these are hit, it shows the amount of volume that the candle that corresponded to that had. So this one, it's reporting 7K. That's because the candle all the way over here had 7K, as you can see right there. Okay, so now we got that out of the way. How do we use this? Well, price likes to go toward liquidity. Price likes to go toward price areas that have had, that not have had, but are likely to have a lot of trading in them. What I mean by that is this. Think about this super simply for about 20 seconds. If there's a lot of volume in a candle, that's between buyers and sellers, right? Some of the time, there's also going to be an open interest increase, which we can see here through the open interest delta. When there's an open interest increase, like let's say right here, open interest increase, and not only is there an open interest increase, but also there is a ton of volume. What that's indicating is that a lot of people are hopping into positions, meaning a lot of longs are entering and a lot of shorts are entering. When that happens, what ends up happening is if price ever breaks beyond that high or breaks beyond that low, a lot of either longs or shorts are going to get hurt. So this being said, with that theory in mind, basically price likes to gravitate toward high numbers. Here's what I mean by that. Look at this right here. If you look at all these green lines, they don't really correspond with a lot of volume. But then look at how large this volume is at these highs right here in red. What this is basically saying is that price is moving beyond an area of very high volume. That's a very, very strong sign. If it's rising, that's very, very bullish. So if you look at any of these price areas here, what I found is that almost always the areas of very high, very large increase of volume and open interest, like right here and here, this whole price area right here had a bunch of traders entering. What that makes it perfect for is stop loss hunting. And look at this candle right here. It just burst right through and killed a lot of these traders. The reason why this was so important is look at just how large this amount of volume was. 17,297 Bitcoin were transacted at the candle corresponding to it right here. Okay, so this is what this means. Because so many Bitcoin were transacted here, on that candle right there in red, we have a lot of longs and shorts entering. When that happens, guys, you have to know the psychology of scalpers and short-term traders. What ends up happening is a lot of shorts might put their stop losses right above the wick of this candle, and a lot of longs might put their stop losses right below the low of this candle. What that also might mean is that if people had shorted on 100 times leverage, if price goes any higher beyond that price wick, it's probably going to cause a lot of cascading liquidations to the upside. So when you see a bunch of volume transacted and an increase in open interest, That's indicating that if price goes beyond the high of that candle, if it's at a market high in red, will probably cause a lot of carnage. And carnage it did. Look at that right there. So if you look at all of these examples, guys, and I'm going to switch it to a different asset soon. I'm also going to disable this. Yeah. If you look at all these examples here, you can see that just about every time, now it was green that had a lot of large numbers, but just about every time price was gravitating toward areas that had previously had a lot of volume and open interest increase. And the reason that might be happening is because a lot of traders had put their stop losses and liquidation points right beyond those candles. So you can see this happening just over and over again. So now let's do a analysis of the current range of all of these untapped liquidity points. All of these price points have not been breached. All of these highs have not been breached, and all of these lows have not been breached. Let's go look at which side would cause more carnage. Well, right below this low, we can see that there's a fair amount of people who probably put their stop losses right here. And then there's a very large amount of people putting their stop losses right around here. Because what this indicator is basically showing you guys is where are people putting their stop losses. That's the whole point of this entire indicator. It's trying to imagine where are people's stop losses and liquidation points. Usually right above highs and usually just below lows. And a good way to make one more important than the other is to look at large volume and open interest increases. And that is how you can use this indicator. So with that being said, if price were to go lower, it will cause a lot of carnage. You can just see that here, 26,684 Bitcoin were transacted on a candle that has not been breached yet. What that means is, look at this candle right here. This candle had a bunch of people entering positions. Maybe a lot of them were long, and maybe a lot of those longs had leverage. And if they have leverage, they will be liquidated if price goes below this point, if they're on high leverage. Not only that, but I'll bet you that a bunch of traders who are long put their stop losses right below the swing low. It's what you're taught to do, right? So that all being said, if price does breach 29,600, it will probably cause a lot of volume. And consequently, I would not be shocked to see price testing these lows. So this is basically the stop loss indicator that I find really, really helpful. But let me go show you how I actually use it, which is not on Bitcoin. It's on altcoins. This I found way smoother, way simpler, just very straightforward. Like, look at this right here. We can see right here, we have two ranges, guys, right? Right when price had done this. We have a amount of volume here that was how much? We have an amount of volume here that was 24.7 million, but the volume here was 89.243. That's why you see that 89.243 that was hit right there. Basically, this is saying there's more volume to the upside than volume to the downside. Totally get it, cool. But if price were to go beyond above this wick, a lot of the traders who may have entered short recently, here or here, they're going to be destroyed. And destroyed they were. Volume spike. But there's just not that much activity down here, indicating that there might not be too many stop losses here. That's because price does like to... Oh, the market makers are calling me. That's because price does not like to go to areas that don't have a lot of stop losses and liquidations. Basically, this indicator is just going to give you a good reference point for where are people going to get stopped out and liquidated. Okay? So if we look here further, you can see that all of these very large numbers were hit, right? Am I on auto? Yeah, I am on auto. And sometimes they can get a bit bunched up. If they ever do, what you're going to do is you just adjust your scale, and then you can read it right here very cleanly. It might be hard to see on my screen, but when you're viewing this on your own, and I'm going to share the indicator as well, it will be a lot easier. And then finally, let me end with a current analysis of kind of what's going on in this very wild uptrend. So at this point right here, this is the highest high that price has made in a very long time. That is why you don't see any more lines up here, okay? Because there would be a red line up here only if a previous high had been made and it was an untapped liquidity point. All liquidity has been tapped already. I mean, so there's a lot of damage that could happen to the downside right here. For example, if price were to go a little bit lower, well, there's a lot of people that probably have their stop losses here, and you can see the amount of volume that was transacted that could correspond to the amount of stop losses that might be in that area. If we go a little bit lower time frame to maybe get a bit more of a short-term read, you can see all of these points right here as well. And it looks like the largest damage would probably be, is that million or K? I think that might be. Is that? I can't really tell what that is, but the most damage that would happen would probably be price going here. I think that's pretty obvious because this amount of volume right here was very large. This amount of volume was 21 million. If price goes down here, it's probably going to kill a lot of traders. That's going to be it, guys, for the swing points and liquidity. Really, really helpful indicator. If you guys want any of my settings or just a little bit more of a deeper analysis of how I look at this indicator, then join the Discord and we can go from there and have a conversation. I find this really, really helpful. It's a really good way to look for a volume surge and then looking for, are longs and shorts opening in this area? And if they are, longs are probably going to get killed below the low, shorts are probably going to get killed above the high. And then just thinking about a magnetization strategy that preys on buying and then having shorts get killed as price goes higher, or shorting and then seeing longs get killed as price dips below lows and goes lower. Really cool indicator. And yeah, I'll see you guys in the next one.